Stop scrolling for a second. In 2026, millions of Texas homeowners could lose up to $140,000 in protections they already think they have, without selling, moving, or doing anything wrong. It's called the Homestead trap, and it happens when people assume their exemption is permanent. But the rules change and counties remove it overnight. One missed notice, one mismatched address, and your taxes can spike thousands of dollars instantly. If you own a home in Texas, this might be an expensive mistake you never knew about. Stay to the end so you don't fall into it, and learn how to avoid it. Number 1. Verification reset cycles and silent eligibility purges. Counties across Texas are increasingly conducting verification reset cycles to confirm whether properties still qualify for the homestead exemption. During these cycles, appraisal districts quietly purge records, especially when mail is returned, addresses do not match, or owners do not respond to verification requests. Many homeowners assume that once filed, their exemption lasts forever. But growing anti-fraud efforts mean that 2026 is shaping up to be a major refile year. The trap is that everything feels normal while the exemption is quietly flagged for removal, and most people discover it only after a shocking tax bill arrives. The financial impact of losing this protection can be huge. The homestead exemption does more than provide a small discount. It shields homeowners through value growth caps and the expanded $140,000 school tax exemption. When the exemption is removed, taxable value can jump to full market level in a single year, wiping out years of capped increases. That means sudden escrow shortages, bigger monthly mortgage payments, and unexpected bills that strain family finances. Once the value resets higher, reinstating the exemption later often does not lower the inflated assessed value, creating a lasting financial burden many never intended to trigger. Homeowners can avoid this by treating 2026 as a proactive status check year. Log into your county appraisal district account, confirm that Homestead Active is displayed, and ensure your driver license address exactly matches the property. Keep proof of occupancy such as utility bills, deed records, or lease termination documents ready, because audits increasingly request fast document uploads. If you changed names, transferred the home to a trust, experienced inheritance changes, or rented the property temporarily, be prepared to refile instead of waiting for notices that may never arrive. Protecting your exemption protects cash flow, preserves affordability, and shields Texas families from avoidable tax shocks. Number 2. Tightening residency proof and address mismatches. Across Texas, appraisal districts are steadily raising the bar on residency proof, and many homeowners don't realize how easy it is to fall out of compliance. A simple address mismatch between your driver license and your property record can trigger a review, a freeze, or a full removal of your homestead exemption. Enhanced data matching tools now compare voter registration, utility usage, mailing addresses, and even forwarding orders to spot potential non-primary residences. The risk grows in 2026 as counties move toward larger verification waves, meaning even honest homeowners could get flagged just because paperwork hasn't been updated. The biggest surprise for most people is how small life changes can cause big tax problems. Renewing a driver license at a different mailing address, moving temporarily, or placing bills in another person's name can all make your home look like a secondary property in automated systems. When that happens, the exemption can be suspended without fanfare, removing caps on taxable value and the powerful $140,000 school tax benefit. That's where the real financial shock appears. Higher assessed value, rising escrow payments, and sudden mortgage increases that feel completely out of nowhere. The homeowner didn't do anything wrong. The records simply stopped matching. The solution is preparation, not panic. Treat your paperwork like a shield. Make sure your driver license, voter registration, and appraisal district records all reflect the same primary address. Keep easily accessible proof of occupancy, utility bills, homestead letters, and closing documents in a single folder you can upload quickly if audited. If you recently married, divorced, changed your name, or shifted mail to a P.O. box, double-check that your property address still shows as your primary residence everywhere that matters. Small corrections now help you avoid losing thousands later, and keep your homestead protection securely in place for 2026 and beyond. Number 3. Legislative changes and the expanding $140,000 exemption. Recent and upcoming legislative changes in Texas are reshaping how the homestead exemption works, and that is a major reason many homeowners may be required to refile in 2026. When lawmakers increase exemption amounts or change eligibility wording, appraisal districts often need updated paperwork to confirm that homeowners still qualify under the new rules. With the expanded $140,000 school tax exemption drawing increased attention, counties are moving toward large-scale verification to ensure benefits are going only to true primary residences. Many people think the change automatically applies, but for thousands it will instead trigger a refile request. The ripple effect is financial as well as administrative. Bigger exemptions mean larger savings, so they also invite tighter scrutiny. A missing signature, outdated form, or old filing under prior rules can cause the new exemption level not to apply. That leaves homeowners paying taxes as if the upgrade never happened, losing out on thousands of dollars over time. Even worse, if an appraisal district decides a property no longer qualifies because forms were never updated, the loss of both the exemption and the value cap can push taxable values sharply higher. The very change designed to help Texans can become a trap for anyone who assumes paperwork isn't necessary. What helps most is awareness. Don't wait for lawmakers or counties to reach out to you. Assume that major rule changes mean you should reconfirm your status. Watch for updates from your county appraisal district, review communication about refiling requirements, and be ready to submit fresh forms if requested. Keep documents that prove primary residence, such as Texas ID, utility statements, or homestead letters, in one place so you can respond quickly. Treat 2026 not as a bureaucratic hassle, but as a chance to lock in the full benefit of a $140,000 exemption level and secure long-term property tax relief for your household. Number 4. Ownership changes, deeds, trusts, and title updates. One of the most common yet overlooked triggers for losing the homestead exemption is any change to ownership or title, even if you are still living in the exact same house. Adding a spouse to the deed, removing a former partner, transferring the property into a trust, or completing an inheritance filing can all signal to the appraisal district that the ownership has changed. When that happens, your old exemption may no longer attach automatically to the new title record. Many Texans discover this only after a major tax increase because they assumed that living in the home was enough to keep protections active. The financial consequences are serious. Once the exemption drops, the property loses both the taxable value cap and access to the enlarged $140,000 school tax exemption, allowing the assessed value to reset toward full market level. This can erase years of gradual capped increases in a single year. Mortgage companies then react by raising escrow payments, which can feel like a sudden pay cut. Families who just finished a divorce, estate settlement, or trust planning are often already stressed, and the unexpected loss of homestead protection adds another heavy financial hit that was completely preventable with timely refiling. The key is understanding that paperwork changes equal eligibility review. If you have completed any deed change, probate, transfer on death deed, ladybird deed, trust transfer, or added or removed an owner's name, treat your homestead as if it requires fresh confirmation. Contact your county appraisal district or check your online account to verify that Homestead Active still appears after the change. Be prepared to submit updated forms and proof of occupancy to reconnect the exemption to the new title information. Taking this step now can preserve your value caps, lock in the $140,000 benefit, and prevent a costly surprise property tax spike in 2026. Number 5. Appraisal district audits and rising automated reviews. Across Texas, appraisal district audits are becoming more frequent and far more automated, and that shift is a major reason many homeowners will be pushed to refile in 2026. Districts now use data tools that flag anything unusual. Sudden value changes, multiple properties under the same name, mailing addresses outside the county, or gaps in utility usage that suggest a property isn't a primary residence. When the system flags a home, it often moves straight into audit review. And if the owner does not respond quickly enough, the homestead exemption can be removed by default. Many people never intend to ignore the notice. They simply miss an email or letter and learn about the audit only after taxes jump. The financial stakes of these audits are not small. Losing the exemption isn't just losing a small discount. It can mean the loss of value caps and the powerful $140,000 school tax exemption level. Without these protections, taxable value can surge to full market level, creating thousands of dollars in additional liability almost instantly. Even worse, some audits result in back billing, where appraisal districts charge for prior years they believe were incorrectly exempt. That can turn one missed notice into a multi-year tax problem, adding stress to families who thought everything was already handled. Preparation is the strongest defense. Assume that automated audits are coming and prepare your proof of residency now rather than scrambling later. Keep digital copies of utility bills, Texas ID, closing documents, and any mail showing you actually live in the home. Log in to your county appraisal district portal and routinely verify that your homestead status is still marked active. If you receive any verification letters or online messages, respond immediately instead of setting them aside. Treat communication from the appraisal district with the same urgency as a mortgage notice. By staying organized and responsive, you can pass audits smoothly, keep your exemption secure, and protect your household from sudden property tax shocks in 2026. Number 6. New construction, first-time occupancy, and homestead conversions. A huge wave of new construction and recently completed homes across Texas means many owners are only now moving from builder inventory to primary resident status. When you first occupy a new home, the homestead exemption does not automatically appear. It must be filed or refiled, and 2026 will be the year when many of these owners are first fully assessed. The trap happens when people assume closing paperwork handled everything. Without a formal homestead filing tied to actual occupancy, appraisal districts often tax new homes at full market value, then question eligibility later, leading to surprise letters and higher tax bills. Another risk comes from homestead conversions. Many Texans are shifting properties from rental to primary residence, or from second homes back to main homes after life changes. These conversions require the exemption to be reinstated, yet appraisal districts rarely do this automatically. If the property was ever listed as non-homestead, it may still be coded that way even though you live there now. When 2026 verification waves begin, these homes will be flagged, and owners who never updated their status can lose both the exemption and the value growth cap, erasing years of savings. The smart move is to act before appraisal notices arrive. If your home is newly built, recently completed, or converted from rental to primary residence, file or refile your homestead as soon as eligibility begins. Save your builder closing statement, certificate of occupancy, and utility activation records as proof of occupancy. Check your appraisal district account and make sure the words Homestead Active appear next to your property description. If they do not wait. Submitting the correct form now protects your access to the $140,000 school tax exemption, limits taxable value increases, and prevents your brand new dream home from coming with a shocking property tax bill in 2026. Number 7. Misunderstanding value caps and sudden taxable value jumps. Many Texas homeowners believe the homestead exemption is only about a small tax discount, but the real power is the 10% value cap that limits how fast your taxable value can rise each year. When the exemption is removed, even briefly, that cap disappears. Appraisal districts can then reset your taxable value to full market value, which may be tens or even hundreds of thousands of dollars higher than the previously capped amount. In 2026, when verifications and refiling waves expand, thousands may discover that a simple paperwork lapse unlocked a dramatic taxable value spike they never saw coming. This is where the $140,000 exemption level becomes both protection and risk. With higher exemption amounts on the table, counties are more motivated to ensure only fully qualified homeowners receive the benefit. If your exemption falls off, you lose not just that reduction, but also the years of capped increases that kept your bill predictable. The tax bill shock shows up through higher escrow payments, lender shortages, and letters demanding sudden increases to your monthly mortgage. Families already balancing rising insurance and living costs can feel trapped because reversing the jump isn't easy once the value resets upward. Avoiding this trap starts with awareness of how the cap truly works. Think of your homestead status as the lock that keeps taxable value growth under control. If the lock is removed, the value races to market levels, and putting the lock back on later does not always push it back down. Check your notice of value each year and look for both phrases, homestead exemption and value cap applied. If either disappears, act immediately. Refile when requested, respond to verification letters, and keep documentation proving primary residence ready to upload. Protecting the exemption also protects the cap, preserves affordability, and prevents the kind of taxable value jump that can add thousands to your annual bill overnight in 2026. Number 8. Senior, disability, and veteran status triggers for refiling. Special categories such as senior, disabled, and disabled veteran exemptions offer powerful additional property tax relief, but they also bring extra verification requirements that can force a refile in 2026. These exemptions often activate after milestone birthdays, disability determinations, or updated VA ratings, and appraisal districts may request new documentation to keep them active. If records are incomplete or status changes are detected, the exemption can be paused until the homeowner responds. Many people assume these protections are permanent once granted, yet districts increasingly require proof that the qualifying status still applies, especially as exemption values grow. The stakes are especially high because these categories tend to stack with the main homestead protections, adding savings on top of the expanded $140,000 school tax exemption. When they are removed, the impact is multiplied. Seniors can lose tax freezes, disabled veterans can lose percentage-based reductions, and families relying on fixed income can be hit with sudden increases they did not budget for. A missing form, outdated identification, or unreported life change, such as moving the home into a trust or changing ownership shares, can unintentionally interrupt eligibility and trigger back payments or higher future tax bills. Preparation is your best safeguard. If you or a household member recently turned 65, received a new disability rating, or updated VA documentation, expect to submit fresh paperwork and keep copies in one place. Verify that your appraisal district still lists both homestead active and any special exemption status next to your property record. Make sure identification addresses match the property and that your name appears exactly the same across all documents. If you inherited a property from a qualifying parent or spouse, confirm the exemption transferred correctly rather than assuming it did. Treat 2026 as a year to reconfirm every benefit you are entitled to, so these valuable protections stay locked in, your taxable value stays controlled, and your household remains shielded from unexpected property tax increases. Number 9. Rental conversions, temporary moves, and primary residence confusion. Many Texans unintentionally fall into the homestead trap when life takes them elsewhere for a while. Renting out your home, moving temporarily for work, staying with family, or owning more than one property can all create primary residence confusion in appraisal district records. If your home was ever coded as a rental or non-homestead, the exemption does not automatically return when you move back. In 2026, large verification cycles will spotlight these properties, and owners who never formally refiled can suddenly lose both the exemption and the protection of capped taxable value growth. The risk grows because automated systems now detect lease listings, utility patterns, and mailing address changes, flagging homes that might not be occupied by the owner. Even short-term rentals or brief relocations can trigger reviews. When the exemption drops, the result is more than a small tax change. Without the homestead shield and the enhanced $140,000 school tax exemption, taxable value can reset upward, pushing mortgage escrows higher and draining monthly budgets. Homeowners are often shocked because they are back living in the house and assume the benefit followed them automatically, but records do not update themselves. Here's how to stay protected. Anytime your property changes from rental back to primary residence, treat it as a situation that requires a fresh homestead filing. Keep proof of occupancy, such as move-in dates, utility reconnections, and driver license updates showing the property address. Remove old rental listings when you move back, and make sure your mailing address matches the property on county records. If you own multiple homes, clearly designate which one is your primary residence, and keep documentation that supports it. By formally refiling and aligning your records, you secure your homestead status, preserve the value cap, and keep access to the powerful $140,000 exemption level, avoiding costly surprises when 2026 verification reviews begin. Number 10. Missed mail, digital notices, and communication gaps. One of the most common reasons Texans fall into the $140,000 homestead trap isn't fraud or major legal change. It's simple missed communication. Appraisal districts increasingly rely on digital portals, email alerts, and online accounts, while many homeowners still expect paper letters. If notices go to an old address, land in spam folders, or sit unopened during a busy season, required refiling requests can easily be overlooked. By the time the homeowner realizes anything is wrong, the exemption has already been removed and the property's taxable value has jumped. Nothing about the house changed, only the communication did. This silent failure has big financial consequences. Without the homestead exemption, you lose both the powerful value cap and access to the expanded $140,000 school tax exemption many families are counting on. Mortgage lenders then recalculate escrow payments, and monthly costs rise without warning. For households already stretched by insurance and utility increases, this sudden jump feels like being punished for missing a single message. Because exemptions can be removed faster than they are restored, families may spend months paying higher taxes before paperwork catches up, and sometimes the higher assessed value becomes the new baseline. The fix is simple but intentional. Close the communication gap. Create an online account with your county appraisal district and turn on email and text alerts. Check that your mailing address and physical address are identical across your mortgage servicer, appraisal records, and driver license. Add appraisal district emails to your safe sender list so notices don't vanish into spam. Set calendar reminders to review your property record every year, especially through 2026. Keep documents like utility bills and identification ready in one folder, so any refile request can be completed in minutes rather than months. Staying connected to your appraisal district protects your homestead status, keeps your value cap secure, and ensures the full benefit of the $140,000 exemption stays where it belongs, protecting your Texas home. Texas homeowners are standing at a crossroads as 2026 approaches. The expanding $140,000 homestead exemption, tighter verification cycles, and automated audits combine to create both an opportunity and a trap. The opportunity is long-term protection, lower taxable values, preserved value caps, and predictable housing costs. The trap is silence, missed notices, address mismatches, and unfiled paperwork that quietly erase benefits families are relying on. Refilling is not just bureaucracy. It is a proactive financial strategy that can save thousands of dollars over the life of a mortgage and protect equity during volatile appraisal swings. By reviewing exemptions now, updating primary residence documentation, and preparing to refile when requested, homeowners can stay ahead of policy shifts rather than reacting to them. The key actions are simple. Verify status online, align identification addresses, organize proof of occupancy, and respond quickly to any appraisal district contact. These steps are small compared with the cost of losing caps and elevated taxable values that may never fully roll back. Awareness today prevents shock tomorrow, and knowledge becomes a powerful shield for your household budget. The bigger message is empowerment. Property taxes can feel confusing and overwhelming, but they do not have to be mysterious or out of your control. Understanding how exemptions work puts you back in charge of one of your largest expenses. Treat 2026 as a scheduled financial checkup for your home. Protect your homestead status, safeguard affordability, and make sure the benefits promised by Texas law reach your family when they matter most. If you were in my shoes, what part of the homestead trap would worry you most? Tell me in the comments. I genuinely read them. Check out our previous video for the next step in protecting your property and your wallet. We pour hours of research into these guides. Please support us and subscribe to the channel. It's just one click, and it helps more than you know.